Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope everybody had a very good day and a very beautiful weekend as well. And in today's markets, guys, well, the bulls are starting to put together a little bit of a bounce. Obviously, one day's worth of a bounce is not enough to say whether or not the pain is finally over after your S&P and QQQ had major declines last week, but it's definitely a start. So in today's video, guys, we're going to take a look at exactly that bounce criteria. Is the bounce sufficient enough, or do the bears still have an opportunity to kick back and send us even lower? We're going to take a look, guys, at some of our major market indexes in terms of our technical analysis first. Second, dive into our big tech names technical analysis and see whether or not it is a good time to be buying the dip on big tech. And lastly, take a quick glimpse into my portfolio to see some of the opening trades that I've made for the week. So without further ado, guys, let's get right into today's video. SPY up a very healthy 1.03%, and the QQQ's up a nice 1.5%. Overall, guys, very nice broad market performance today. As you can see on the heat map right here, most of your performance did come off of the back of semiconductors. Take a look at that list, guys. Very nice recovery by semiconductors after they got pretty much destroyed last week. NVIDIA really leading to the upside here, 4.76%. Very nice day for them. And over here, guys, one of your other outperformers, Tesla, coming with a very big day prior to their earnings as well. Keep in mind, guys, we do have a lot of company earnings this week, which is going to be leading to a very volatile week indeed. Take a look at all of your earnings that we have slated for the week. Now, keep in mind, tomorrow after the close is going to be a very big one. We have Tesla and Alphabet Google, right? They're going to be two of the major reports coming in this week, but we do have a lot of other ones that could severely impact the markets, especially in tech, right? Spotify is going to be tomorrow before they open. UPS as well, going to give us a hint into the consumer. Visa going to be a very big one. Coca-Cola as well. Need to hear what they have to say about the consumer too. And then on Wednesday, we have a couple more big ones. Chipotle, ServiceNow, IBM, some of your major names that are going to be reporting then. And we have a bunch of defense names slewed in between all of our earnings, right? Lockheed Martin tomorrow before they open, Thermo Fisher Scientific tomorrow on Wednesday before they open, General Dynamics as well, Boston Scientific, right? So many big names this week on Thursday as well. American Airlines, AbbVie, some of your few bigger names, right? Obviously Texas Roadhouse, one of the favored restaurant brands in the market right now. And then on Friday, we have Bristol Myers Squibb and 3M, some of your more defensive names. So all in all, guys, we're going to get to hear from pretty much everybody across the industry this week, and we need to pay special attention as to what they have to say about the health of the consumer and consumer discretionary spending. Also, this week, guys, we do have two major market moving events. Number one's going to be on Thursday, where we have reporting of GDP for Q2, and then on Friday, we have PCE inflation. Those two things are going to be market moving events. So this week definitely could be a very volatile one with these two macro events and all of your earnings, of course, as we kick off earnings season. As a whole, though, guys, our major market conditions today were fairly favorable for your broad market bulls. The rotation is still in full effect, and the market looks very broad. Keep in mind, guys, on the one-day relative, everything was pretty much in the green, except for energy because the oil prices have been slightly declining ever since last Thursday's highs. Now, on the one-week relative, where do we stand after today's bounce? Well, very mixed market nonetheless, and your major decliners still in technology, right? Going to take a little bit of a while to erase last week's declines. Here is your one-week relative performance. And you can see big tech, even though we got a nice bounce today, are still heavily in the red over the last 1 week of trading. So let's get right into today's video, guys. We're going to go through a couple names before we get into SPY and QQQ. Let's go over a few of the major market movers over the course of today, right? Number one has to be CrowdStrike, of course. CrowdStrike still battling with the aftermath of last Friday's IT global tech outage because of how intertwined they are with Microsoft systems. The company dropping another 13.5% today off of their most recent 2-week highs, guys. They are now down 34%, and the RSI levels right now on the daily at about 18 are some of the lowest in the company's entire history since IPO. You would have to go back to COVID to find such oversold levels. Now, I do believe that these events will potentially affect CrowdStrike's earnings in the next maybe 1 or 2 quarters, and analysts do agree with that. But thereafter, guys, in terms of the longevity of the business, I don't think it'll play a major role in terms of the long-term prospects of the company. The company is still growing very, very well. So it could be a decent little time to start buying the dip on CrowdStrike if it is one of your favored names, right? Company is now trading back to pretty much January prices, erasing all their gains for the year. So I kind of like this one here, all the way down to this line that I drew, pretty much 224. The valuation now is getting a little bit more manageable, right? Even at The current terms right now of 263. Valuation is a little bit high. I didn't change the price right here. It should read 270, but the valuation still at $270, guys, is still a 2.5 peg. It's a little bit rich, so if we can pull down a little bit more, that's where I'm going to be interested in getting into CrowdStrike. Now, in other news, guys, well, there are a few other trades that are presenting themselves, right? Let's take a look at some of our earnings collapses over last week, and we can see that a lot of them may be representing some decent buy opportunities for some reversal points. Domino's Pizza right into the support level right down here, 410 down to pretty much 390, right? Representing a very nice area where we could potentially start building a position in Domino's for the eventual recovery of the brand. We went through their earnings. Their earnings were pretty good, guys. I think it's really just a one-off event for their earnings. Would not be surprised if this company over the next following months just steadily starts regaining its share price. Number 2 has to be Charles Schwab. Charles Schwab had a disastrous week last week, right? Coming down pretty much since the highs of the week, almost 20%, which is really uncharacteristic for them as an institution, right? And we can see we're building a nice base of support towards lows right here. So it could just be the time for a little bit of share appreciation, bringing us back into the maybe $68 to $70 range. Could be a nice opportunity to be buying the dip on Charles Schwab as well. And the last earnings that got crushed last week was ASML, right? And they've been moving really well today, 5% to the upside, putting in pretty much a temporary bottom right now around the 200-day moving average, looking like a decent swing trade opportunity or the possibility for a long-term position build in such a great company. We went over their earnings as well, and their earnings were fantastic, guys. Just the market reacting negatively to the downside, as well as from the Biden administration comments about cracking down on the semiconductor industry in terms of exports to China, right? Those are just a few of a few names, guys. A few other names that I'm looking into because they've been coming down very, very hard. Elf Beauty, nothing fundamentally wrong with the company at all, but they are down significantly. If ever we pull back lower, 155, 150, I'll be playing Elf Beauty down there as well. And another one that's been coming down significantly just because of concerns about slowing of demand, right? This company, CLH, is down 52% from their highs in the month of May, coming into a very wide box of support right now, all the way down to about $46, $45, representing some decent value down here, if you ask me. I don't think this company is going anywhere. If anything, their fundamentals are only getting better year by year. So I'm starting to once again build, after selling a lot of it up here, I'm starting to build another position in CLH down here. Those are just a few of the big market movers today. Obviously, there's many more, but I just wanted to recap a few of them, right? So now let's get into our technical analysis of the SPY. And you can see, guys, well, the SPY is looking fairly good. So I'll remind you what was the context as of last week. Daily uptrend was in motion, and then we lost the daily uptrend, right, by this huge move down. So what are we maybe expecting? Well, we were talking about the support level, and we reacted nicely from it on Friday into today, and we were looking for the change of the hourly trend. As you can see now, guys, in regular market trading hours, we now have the hourly trend back to the bulls. So as long as this hourly uptrend continues, we will keep a close watch on the size of the bounce. The size of the bounce lets us know whether or not the bulls can have it in them to recover this daily uptrend, or if the bounce size is too weak, we may just be due for a further bit of rollover on the indexes. Now, how is the size of the bounce right now? Well, the size of the bounce is about 38%. That is not good enough. So if we were to roll over the hourly tomorrow back into an hourly downtrend, suffice to say the probabilities do favor the bears for a little bit of daily downtrend follow through. However, if we are able to bounce over the next few days, especially with Tesla and Google earnings, if they are favorable, if we can get up to at least 558, 559 on the SPY, that would be a 618 retracement, and the bulls would have enough space to then potentially recreate the daily uptrend in motion. So looking not too bad for a first day's worth of bounce, but we just got to keep our eyes peeled, guys, because if ever we lose this, we'll just keep in mind anything on the weekly, anything above 519, going to be looking for a weekly higher low for continuation of the uptrend. So your long-term bulls are fully in control, but we're really battling on the short-term timeframes, and the battle will be won or lost, in my humble opinion, with all of your earnings this week and next week as big tech earnings continue. Moving on to QQQs. QQQs also same pretty much scenario as the SPY. QQQs setting a daily downtrend in motion right now, and we are now watching the size of the bounce. I was telling you guys, watch the hourly trend. You will know that your daily consolidation is done. We have finally now recaptured the hourly uptrend. So same logic applies, right? We are looking for the size of the bounce in relation to our most recent lower high all the way up there. So let's take the bounce in consideration right now, and you can see the bounce is not even up to 38.2%. We would need to get at least as high as 490 on this daily bounce attempt to give the bulls the best chance at being able to create enough space to reset this into a daily uptrend and put an end to the pain. Anything under that before we lose the hourly time frame back to the bears, and unfortunately we will most likely be revisiting our lows and potentially even lower, right? So keep your eyes peeled out for that. Most likely going to rely heavily on earnings this week too. And if ever we do continue the rollover, just keep in mind here, guys, we have a lot of space, anything above 442, just looking for that weekly higher low for potential trend continuation. Yes, we are in a support zone right now, but there's a very large one below us, 461 down to about 445. As of now, the bulls still in long-term control of your monthly and weekly charts, but the daily is going to be a continuous battle over the next 2 weeks with earnings. Moving on to XLF right now. So financials pulled back hard Thursday and Friday, and we were expecting just for them to be establishing a higher low and potentially continue the daily uptrend, and it seems as though they do want to go after it. Now, keep in mind, this will be affected heavily by Visa's earnings tomorrow after the close. Capital One, not so much. Visa is going to be the most watched player in the financial space. So daily uptrend is very nice for the bulls. Seems as though they put in the higher low today. You can see slight recapture of the hourly trend. We would like to see this continue into tomorrow to really get the bulls on for that next leg higher. Everything is good right now. However, if we were to roll over and pretty much come down into this level, just keep in mind 4240 is a very decent spot. Previous all-time high resistance is going to be newfound support. Your moving averages are sitting there too, so could just be a case in point for a breakout, retest of the all-time highs, and maybe run a little bit further. On the weekly, everything is looking gorgeous right now, still in a very nice weekly uptrending motion on XLF, so no red flags whatsoever for the bulls. Rotation continues to be healthy. If big tech continues to have slight declines, we need to see financials and the next one, healthcare, continue providing that rotation for your S&P 500 bulls. Moving on to XLV right now, healthcare. So healthcare also, right after a big decline on the Thursday session due to Eli Lilly pulling back almost 8-9% in one single day, well, now we're looking to establish the daily higher lows and run a bit further. The daily higher lows are now set, and you can see that clear recapture of the hourly uptrend. That's why it's so important, guys, to understand the inter-time frame analysis between the weekly, the daily, and the 1 hour, right? It really gives you a good indication of who is in overall control. And right now on the daily, the bulls are definitely in control. Beautiful engulfing move, got the higher low, and now potentially looking for that continuation higher. So looking very good, reacting from our previous resistance zone, which has now been support, which is pretty much your previous all-time high region, right? So no red flags, just looking for some continuation on healthcare. And if ever we don't get it done and set up for the daily downtrend crush, well then, guys, just understand anything above 143, just looking for a weekly higher low for continued trend appreciation for the XLV bulls. And I do believe this sector will perform well for the second half of the year. Usually when interest rates come down, XLV healthcare is one of your industry winners whenever rates come down, right? So on the weekly, guys, looking very healthy. So much previous resistance, which will now be support. So I really don't believe the bears are going to have an easy time getting through this location and reversing this. In my humble opinion, the bulls still do have this for your uptrend resumption. Now moving into semiconductors. Semiconductors, very powerful day, guys. Going to erase this hour right here. That was for a thumbnail. So semiconductors, very nice first bounce underway. However, we need to keep an eye on the size of the bounce, right? So obviously hourly uptrend is back in motion. As long as they continue that hourly uptrend, your daily bounce continues. Now, what is the size of the bounce in relation to our most recent lower high? Because we are always in a daily downtrend. We are always expecting a lower high, and then it's up to the bulls, depending on the space created, to reset the daily uptrend. That's why we watch the size of the bounce. If the size of the bounce is weak before the hourly trend rolls over, well, then we are most likely going to revisit the lows and maybe even breach them. However, if the size of the bounce is very adequate, gives the bulls the best chance at resetting this daily uptrend and putting an end to your weekly consolidation as well. So in terms of the size of the bounce right now, guys, size of the bounce after 1 day is barely up to about 30%. So we can't really derive too much from here. Suffice to say, if they were to lose this into tomorrow's trading session, well, the bears have a very good chance of just rolling this over and continuing the slight flush there. And that could potentially bring us in to some lower weekly levels, guys. I'm always targeting this zone right here. I apologize, I erased this box. So the zone that I'll be targeting, guys, in the event of further weekly rollover by the semiconductor industry as a whole, is going to be down here 240 all the way down to about 227 could be a very nice area of long-term support, and we're looking pretty much for the monthly higher low for continued trend appreciation, right? So we've had a couple company earnings so far in semiconductors, and depending on the company, right, ASML has voiced its concerns over the past pretty much 6 months that the first half of 2024 would be a bit slower, but the second half would be very good. A lot of other companies have voiced the same concerns, especially the ones manufacturing the actual semiconductors, right? Not so much NVIDIA and AMD. However, a lot of other chip players like NXPI had their earnings today. Micron has said the same thing, to where the first half of 2024 would be a bit slow and then the second half a bit better. So ASML's had the same context. TSMC, on the other hand, they said no demand slowdown whatsoever. The second half of 2024 is going to be just as strong as the first one. So very, very mixed industry right now. As a whole, though, in a general fashion, second half of 2024 should be a lot better for them, and 2025 should be a very nice boom. So just looking for the potential bottoming out here, curious to see whether or not the bulls have it in them to really get this going. And as I said, guys, you would need a bounce size at least to the 618, at least to about 266. If we can get a bounce on this daily run to 266, gives the bulls the best chance at resetting this into a daily uptrend, and a lot of that is going to be on NVIDIA. Now, moving on to the Russell. So the Russell, after pretty much consolidating here for the past 3 trading days, after hitting tremendously highs on the RSI, consolidate a little bit, and now looking for the daily trend resumption. We were always looking for that, guys. Daily uptrend, looking for the daily higher low, and then potentially a recapture of the daily momentum higher, right? So just keep an eye on your hourly timeframes, guys, right? As was hourly downtrend, was your consolidation. Now they have shifted into the hourly uptrend, so we now have a future bounce underway. So size of the bounce right now looks very good. We're just going to be looking for the potential breach of 226 and start attacking the further levels up here, right? 228, 230 is going to be the big one. That is the current all-time highs. Now, if for ever which reason the Russell rolls this over this week, guys, is it that much of a bad thing? Not tremendously, guys. Why? Because they have control of the weekly, right? So much space on the weekly. Anything above 198, just going to be looking for a weekly higher low for further trend continuation. So if ever the Russell loses its gains over the course of the week, I will be looking to shop for the Russell down in the retest area, right? Break out of this huge range of consolidation, big support, big resistance, and big resistance right here as well. So a lot of confluence down there. If we were to retest this area, 210 down to 208, this is where I'm going to be positioning for the eventual trend recapture. I do not want to chase this one specifically, but the Russell right now looking pretty good. Your major winner of the day once again. Now, lastly, the Dow Jones. The Dow Jones not looking too bad today, up about 0.32%, and just looking to continue this daily uptrend in motion, tagging the 12 EMA after as of the Friday close, and just really consolidating after overbought conditions, right? We were saying that the Dow Jones really can't stay at the daily RSI at with a daily RSI at 80 for too long. It is not semiconductors, right? It's the Dow Jones, more defensive. Usually when we hit 80 on the RSI, on the daily especially, we tend to have a little bit of a pullback. Healthy pullback indeed, though, because anything above 39,100 was just going to be looking for a daily higher low for continuation of the uptrend. Hourly uptrend, slightly back in the bulls' favor right now, but this is up for grabs, guys. The bears can very easily roll this over tomorrow, and our daily consolidation will just continue. Now, for the continuation of daily consolidation, the previous all-time highs, guys, 39,900 is going to be the retest area for a potential recapture of the daily uptrend thereafter. And if ever the bulls cannot get it done and we roll this over a little bit more, well, then just keep an eye on the weekly, guys. Weekly glorious uptrend right now. Anything pretty much about 38,000. Just gonna be looking for that weekly higher low for continuation of the uptrend. The big pocket is right here, guys. 40,000, let's call it, all the way down to about 39.5. Gonna be very tough for the bears to get through that because there's so much previous support right there. So all in all, the indexes are looking pretty good, but we need to keep a continued eye on the size of the bounces because especially on the SPY and on the QQQs, your daily bulls are in control right now. So we need to be sure with the size of the bounces that if they can put in adequate bounces, guys, most likely the pain will be temporarily over. And in my humble opinion, guys, it is all going to be up to the major players, Tesla, Google, Amazon, Apple, Microsoft, all reporting in the next 2 weeks' time. Now, moving on to Moving on to big tech now, shall we? So moving into Apple, guys, Apple not looking too bad at all, down about 0.16%, but that's okay. Apple does deserve a little bit of consolidation after this monster rally, right? So Apple's still consolidating, still at a loss of the daily uptrend, losing the daily uptrend. Now we have to watch, guys, the hourly time frame, right? Very tight range. If ever we break these lows, well, then you guys know that the daily consolidation simply continues, right? So daily consolidation for Apple, we are just looking for a maybe daily lower high into daily lower low, which will be daily downtrend underway, which would mean that our weekly consolidation simply continues. Where can we maybe end up on the weekly, guys? We'll keep an eye right here. 217 all the way down to about 215. This little pocket is going to be your first line of defense for the bulls. And then below that, guys, we have the weekly higher low, which is right here, 207.12. You would not like to see the bulls lose this area because then it sets them up for something like that. But in my humble opinion, guys, Apple has earnings pretty much in about 8-9 trading days time. So I don't really expect major rallies by Apple or significant losses by Apple much before their earnings. I would like to see them protect the weekly higher lows, however, prior to their earnings, which is 206. We cannot get too close to 206 before their earnings, because if ever earnings are not well received, then maybe we just tumble back down into the 200 range, right? So all in all, Apple is still looking very bullish. It's just very tough for me to play it up here. I will be waiting for earnings personally. Moving into AMD right now. So AMD also mustering a little bit of recovery underway right now, 2.83%. Daily was absolutely crushed over the past couple of days, 4-hour oversold, and now we have a little bit of a bounce underway, guys. So watch the hourly time frame, right? Hourly uptrend back to the bulls right now, which means your daily bounce is underway, but the bulls are going to need a ton of momentum on this one here, guys. Keep in mind, all of this region, which was previous support, that is now resistance, unfortunately, for our bulls. So going to be tough for them to get through this without overall broad semiconductor market upswing performance, right? So keeping an eye on the size of the bounce here, guys. Well, don't need to do it too much, right? The size of the bounce right now is barely anything, barely 10%. If you want to see that your bulls have the capacity to reset the daily uptrend, we need to at least, it should be the 618, but we need to at least see a 50% retracement on this one daily move, guys. If we can get all the way back up to 168 on one daily move higher, then it sets the bulls up nicely above this previous zone, which is now resistance. They can be able to use it as support and maybe give us a daily uptrend resumption leading into their earnings, which is going to be next Tuesday. So not a lot of time before earnings, guys. However, if for ever which reason, guys, we continue the rollover, right? Just understand we could get a weak bounce and roll over a bit more. The big support zone for AMD, in my humble opinion, 142 down to about 133. Previous resistance right here, previous little zone of congestion. That should be the next area where the bulls line up a little bit of defense. The weekly not looking too good. It was a gorgeous weekly uptrend, and now we've pretty much given it all back. So the bulls have a ton of work to do to recapture this, guys. I really hope for AMD bulls that the earnings are very well received by the company. That would be their best chance at setting up a reversal pattern in the next week and a half, right? And if ever their earnings are bad, we'll expect us to really revisit this 140 to around 130 region. Moving on to AMD right now. So moving on to Amazon, excuse me. Amazon was having a very good day up until really the last 15 minutes of trading, really up until the last hour of trading, right? They did a great job of putting in a nice rally all throughout the day from the moment that they pretty much opened today, right? Open and then tried to rally throughout the day. The last hour of trading, it really all came undone. Nothing really wrong fundamentally with the company, right? Just a lot of momentum to the downside right now. So we are maybe expecting the lower high that we got. Just watch, guys, for the reversal of the hourly time frame. If ever we were to lose this level right here, 182.17, we're almost there. If we lose that, hourly trend is back to the bears. We then have our lower high, and then we may be looking for lower low. So if ever we do continue this daily downtrend motion, just keep in mind we're coming up into a very big area of support here, guys. 177 all the way down to about 166. That's going to be the one to watch for the bulls, where they could put up the best defense. Weekly uptrend is still in favor for the bulls, but now the bears have recaptured a lot of the move, guys. So similar to AMD pretty much, it is all going to rely on their earnings, which is pretty much next Thursday, guys. If Amazon can get a good earnings report altogether, we may be able to have a significant bounce up here to be able to recapture the weekly uptrend in due time. However, if earnings are not well received, well, we could just expect, guys, a revisit of maybe the 165 level, which is your prior earnings gap level, right? So Amazon really operating in a wide range over the next 2 weeks, especially with that earnings cycle. One thing's for sure, though, guys, if I do see 160, 175 and better. 175 to 165 on Amazon. In my opinion, it is a no-brainer buy, and I will be buying the dip down there. It is currently a very nice dip opportunity, but very close to my optimal zone. Moving into Google right now, Google having a decent day of recovery here today, 2.21% to the upside. So Google was in a daily downtrend, looking for a bounce attempt and looking to maybe reset the daily uptrend. However, keep in mind, guys, Google has earnings tomorrow, so we won't get to see whether or not that's going to happen with normal price action. Earnings can move this either way. Let's take a look at Google's expected move. It should be about 6-7% usually is Google. So let's have a look real quick. So Google's expected move tomorrow, yeah, it's about 6% up or down, right? So Google could really move either way. 6% to the upside would put us pretty much at the all-time highs, give the bulls back full control. 6% to the downside, however, would lead us into my juicy buying opportunity zone at around the lower 170s. So if ever we come down here into the lower 170s, guys, I really love Google down there. I've been waiting for this location pretty much since the end of the month of May. If we do revisit this location right here, it would be a tremendous buying opportunity in my opinion. Yes, the bulls would potentially lose the weekly uptrend, but no reason that they can't just reset it back in 2 steps, right? I would be highly surprised if the bears are able to weekly downtrend this one. Extremely surprised if they're able to do that. So I still do believe the long-term buying opportunity is there because we'd just be looking for a monthly higher low for potential continuation on the monthly. So the longer-term bulls are in full control right now. Just a little bit of daily consolidation, which is very healthy for the stock in my opinion. So we'll see what happens for Google's earnings tomorrow after the close. Moving into Meta right now, Meta trying to recover as well, 2.23% to the upside, and Meta putting in a very nice leg of bounce ever since the lows were achieved last Wednesday, right? This is a very nice bounce, and Meta does not have earnings up until next Wednesday, right? So Meta, this is what I mean when I say look at the size of the bounce, right? In relation to the most recent lower high, this is a 618 bounce. It sets up the bulls for a decent opportunity to set up for a higher low and give us the daily uptrend back. So Meta is looking very nice with this bounce attempt, reacting beautifully from our support zone that we've had labeled on this chart for a very long time right now. And even the weekly, guys, the bulls are looking to potentially recapture this weekly uptrend. They lost it, losing the weekly higher lows here. They got the flush, and now they will have to put in either a V shape, which is the unlikely scenario. The more likely scenario is maybe a 2-step recovery process on the weekly. However, once again, this is going to be largely predicated on their earnings. Meta also usually moves 6-7% after their earnings. So if we can get a further continuation bounce underway until their earnings, that gives us at least a little bit of margin of error here. Usually they move about 7%. So that would give us a wide margin of error before the lows of last Wednesday pretty much. And if we breach it to the upside, guys, with good earnings, we will just be at the all-time highs. So Meta looking very good. I'm very happy that I bought the dip on the Wednesday crush last Wednesday, looking very, very strong. And if for ever which reason, guys, Meta dips once again back 460, 450, I will be buying this one all day. Moving into Microsoft right now, give me a very brief second. All right, so moving into Microsoft right now, Microsoft looking pretty good if I do say so myself, right? So daily downtrend is clear as day, reacting very nicely from our zone of support that we've also kept labeled on this chart for a significant amount of time. Prior weekly resistance for a long time, guys, February through May. So it's definitely a strong one, now acting as support for the bulls. And I kept on saying when we were up here, guys, watch for the breakout, retest, and maybe run by Microsoft. And it appears as though they want to get that underway. So hourly uptrend back to the bulls. We need to see this maintain. So if they can maintain this hourly uptrend into the next few days of trading, the size of this bounce will be looking good in relation to our most recent lower high, which is this guy right here. So take a look at the size of the bounce right now, guys. Size of the bounce is about 50%. A little bit more, give me about 447, 448. That'll be a 618 retracement. Sets up the bulls nicely for that daily uptrend recapture. Microsoft with earnings next Tuesday, so only just maybe 5-6 trading days left before their earnings. So it'd be nice for them to get a little bit of space created so that in the event that earnings is not well received, Microsoft usually only moves about 5% up or down after earnings. And if we get all the way up here into maybe the 450 range, that would pretty much give us a nice margin of error that if ever the earnings are not well received, at least we have huge support down there. And I do believe that is where the pain will stop for Microsoft. Microsoft not known for its volatility, just a very stable and solid company, right? So looking good. One day of bounce underway. I still do maintain, guys, that 435 down to 420, tremendous buying opportunity for some long-term shares or even a swing trade on Microsoft. Looking very good for the bulls right now, even though we are in a daily downtrend. The long-term bulls on the weekly and especially on the monthly too here, guys, full bull control, right? Nothing wrong to say. Moving into Netflix right now, Netflix as well with a nice little bounce after their earnings. I thought they had an unfair decline after their earnings because their earnings were fantastic, but you guys know how the markets were last week, guys. The markets were very, very timid and overreacting to a lot of things last week, right? Very, very volatile week. So Netflix, a little bit messy right now. You can see, yes, we are in a daily downtrend right now, and the bulls are looking for a little bit of a bounce. The size of the bounce right now is fairly decent. I would put that at about 50%. We're going to forget this one right here because it's a little bit of earnings volatility. So the size of the bounce right now is decent, about 618. I apologize if you can't see it real clearly. Let me try and blow this up so you can see, right? 618 retracement on the bounce right there, looking very, very healthy. So it does set up the bulls for a nice little opportunity at recapturing the daily uptrend. Now, where did we react from? We reacted from the exact location that I was predicting that could be the end of the pain. Prior resistance, newfound support for the bulls, 26 EMA is right there. So looking very good. And we have not yet lost the weekly uptrend, right? So looking pretty good. The weekly higher lows are right here, 626. Need to defend these guys because if we are ever to lose these, it would be pretty much weekly downtrend on Netflix and we'd be looking for further monthly consolidation. But all that, guys, as I maintain, if we retest these levels, 635 down to 600, great location for a swing trade long for Netflix and also for a long-term position for a long-term portfolio if you are as bullish on the company as I am. So Netflix, even though very, very choppy right now, representing a good buy opportunity if we get some continued dips, if ever big tech earnings are not well received. And then as I'll remind you guys, we are just on the march for the potential all-time highs over the course of 2024. So looking very strong. Fundamentally, the company is doing amazing. Now, let's take a look at NVIDIA. So NVIDIA up a whopping 4.76%, looking very good, right? So daily downtrend was underway. We were keeping an eye for the reversal to the hourly for the bulls, right? So choppy here. And now you see clear hourly uptrend in control for the bulls. So if ever they continue this bounce into tomorrow, guys, daily bounce will also be continuously under motion. And keep in mind the size of the bounce in relation to our lower high, right? 131.68. Our lower high right here for the daily downtrend. Size of the bounce right now is quite adequate. Let me just blow it up. I apologize. I keep forgetting that you guys don't have binoculars, right? When you're looking at these charts. So we have a 50% bounce underway, a little bit more, 125.84. That's going to be the 618. If we can get that clear and even higher, sets up the bulls very nicely for the potential daily uptrend reversal. Looking very good, if I do say so myself. On the weekly as well, guys, well, the bulls reacted very nicely from the targeted range of support that we were highlighting, and that was pretty much 119 down to about 115, all of the bottom area of these prior candles. The 12 EMA is also sitting right there. So NVIDIA, guys, not looking too bad whatsoever, really holding its own right now. And the semiconductor industry needed it, guys, because they are your industry leader. So whatever they do, most of everybody else follows. So looking like a very nice continuous buying the dip opportunity on NVIDIA. And if for ever which reason we lose this area right here, guys, keep in mind weekly downtrend will be continuing at that motion. In that motion, monthly consolidation will also be underway. And my sweet spot for NVIDIA, guys, has to be pretty much 105 down to about 95. If ever I see those prices, I'm not saying we are going to get there, but if ever we get there, just know that I will be going fairly heavy on NVIDIA down in that consolidation range. Moving into Tesla right now, well, Tesla obviously has earnings tomorrow, guys, so nice to see them have a 5.5 or 5.15% run up. But obviously the fact that they have earnings tomorrow after the close is going to severely hinder my ability to give some short-term price action targets, right? So take a look at Tesla, guys. What is the expected move for Tesla? And it should be a big one. I think it's about 9%. Let's have a look. So the expected move on Tesla, yeah, it's about 9% up or down, right? So 9% up or down, guys, we already got the delivery numbers, and delivery numbers were better than expected. Tomorrow's focus is going to be all about the margins, right? So keep a very close eye on those margins, and any comments in relation to the FSD robo-taxi event that we should be getting in the month of October. So 9% to the upside, guys. 9% if they get the beat to the upside would be about 273, which really eclipses our prior highs and gives the bulls full control of the daily uptrend once again after some consolidation. Very, very nice tight bull flag formation at the tops right here, right? Looking fairly strong, but 9% to the downside if ever they miss and it's not well received by Wall Street. Well, we're going to be challenging the bottom end of our support zone, guys. And this support zone is a fairly decent one, talking about 240 all the way down to 220. If ever we come down there, guys, just keep in mind, longer term, just maybe looking for the weekly higher lows for some potential further trend appreciation later on in the year, especially more towards the first interest rate cut, which is slated to be in the month of September. So we will keep a very close eye on Tesla's earnings results tomorrow in terms of their immediate price action after. I don't think I'm going to be playing earnings before, but after Tesla reports earnings, there may be a couple trades to be made, especially if we have some downside consolidation, right? I'll be looking to probably play some short puts around the maybe, let's call it anywhere between 210 down to about 200. Going to be very conservative with this one, just trying to farm some premium as I can. And if we do collapse into this location right here, I may be tempted to throw some call options at it just for that rate decrease in September and December into 2025. These would probably be longer duration calls, maybe for something like next March all the way through June. Now moving on to Palantir. Palantir performing very, very well today, right? Palantir is just doing a great job of sideways consolidation. All the market consolidation that happened over the last week, guys, Palantir, if you were looking only at Palantir stock, you would think that nothing is wrong with the markets at all. Such a solid company, just bucking the trend as a whole. So very, very, very choppy price action right now, but just understand your daily bulls are still in full control, setting higher highs and setting higher lows every single week. So looking very good, guys. The most recent higher lows are here, 27.52. If ever we lose this, they lose the daily uptrend, guys, and may just be due for a little bit more consolidation to the downside. Keep in mind, where are we battling right now? Super heated area, right? $29 range, 28 to 29. That is what we're currently encountering right now, which is why it's so hard for the bulls to try and break above. So in the event that the markets continue consolidation in tech and Palantir perhaps gets dragged down as well, just keep in mind, guys, going to be looking for a little bit of weekly consolidation after 10 weeks of gorgeous rally. Going to be looking for a weekly higher low for potentially further trend continuation. If they can't break above in this one move, they maybe need to consolidate lower, get some more momentum before attacking it for a second time. And I will be sitting there waiting for Palantir, guys. If we approach this area, 26 down to $25, prior resistance, right, should be newfound support. The 12 EMA is sitting right there as well. Could be looking weekly higher low for the potential attack of that level. I will be looking to play Palantir in that location right there because the monthly uptrend right now, guys, cannot be ignored. I really do think Palantir has a great chance of attacking $32 over the course of this year. So that's pretty much everything for our daily market rundown, guys. Hopefully you appreciated that. Now let's take a very quick look into some of my new positions for the week. All right, guys, so taking a look at the portfolio real quick, we'll go over a few of the positions that I did close. So you may recall that last week I got assigned AMD at 155 and NVIDIA at 119. Now I had done a very protective strategy on those by writing in the money covered calls, just in the event that Monday's downside continuation would continue. Now, I did close them today, guys, just to free up some buying power because I want to play a lot of these earnings, right? And obviously those two positions do take up roughly about $30,000 worth of buying power. So just wanted to have a bit more dry powder on the side to play some of these earnings, right? So I did close them. So taking a look at how I closed them, right? So NVIDIA, you can see that we wrote these 114 calls for about $590 last week, right? So NVIDIA, you can see that I actually closed them at a slight loss. We took a loss on the NVIDIA position right here by about, let's call it about $300. However, what happened as well is the shares actually increased as well from the 119. So all in all, guys, we made $37 on NVIDIA. Not tremendous amount, guys, but at least we got out risk-free, right? We got a sign, we got out risk-free in one day of trading, and we have that buying power back to play more opportunities over the course of this week, right? So bit of a cautious trade by me. Yes, I could have waited today to write covered calls and made a lot more money or just sold the shares, but you never know how these are going to go. We could have had a very bright day today as well, and I would have been happy. So just looking to get out of the trades and looking to play more and more earnings, taking on a little bit more risk for earnings than maybe I should, but I'm fairly confident in my strategy, and we're going to try and get some better returns this week because last week we kind of took a little bit of a bath after last week's crush on the QQQs, right? AMD, same concept, guys, but AMD, we did lose about $120 because the share price wasn't that much above our assignment price, right? So in terms of AMD, guys, we had AMD last week. We wrote the 150 calls. Excuse me, you will probably see them down here. We wrote the 150 calls. Where are they? They're all the way down here for about 513 cents. We got assigned at 155 and we wrote in the money 150s just to give ourselves a margin of error, a buffer in the event that AMD continued its decline into this week. Well, happy to say, guys, we were able to actually sell the AMD shares today that we got assigned, and we were also able to sell the calls back, but we did lose $120 in the process just because the shares were above our assignment price, 155.46. So we got $46 $6 there, but obviously we lost on the call side. The covered calls were actually negative, right? So true loss between the two is about $120, $125. I'm willing to take that, guys. Between that and NVIDIA, right, we only lost about, let's call it just like 80, 85 bucks between those two positions, which is not a lot. And I do believe that we'll be able to recapture all those $85 losses, guys, over the course of this week, playing earnings and playing other short put opportunities that I do see coming up in the market, guys. Going to try to be rotating in and out of a lot of positions frequently over the course of this week. Now, I did take a couple more earnings trades. Let's take a look at those, guys. So these are not earnings trades, but I am playing the dip on CrowdStrike. So CrowdStrike, I'm playing some bull put credit spreads right here. You can see I have 225s versus the 220s. We got about 21 cents for them, right? So we're risking about $500 for some continuation on CrowdStrike, but 225 is still a ways away, right? And we are very daily oversold right now. So we'll leave these run until Friday and see what happens. But between us and our first assignment, it's another 15% to the downside. I'm not saying it can't get there, but if it does get there, we may just get a little bit of bounce under in the end of the week, guys. I would be very surprised if we do end below 225. Obviously, anything can happen, but it's just a more safer play. So whenever I see some decent premium with a safer play, that's good. So we're making pretty much $21 divided by 500 risk. We're making about 4.2% on the week on this one. So decent ROI. Now, we also took another one, an even more boomer trade on that one. So we took these pretty much at the end of the day, guys. I was waiting to see what CrowdStrike did. We took these at the end of the day, and we even got some decent premium on these ones right here. 215s versus 210s for this Friday. So even more of a decline. That will be like a 20% further decline after today's 13%, right? We got 16 cents for $500 worth of risk. That is 3.2% for the week. So I'm fairly happy about that. Now, I also took a long position on CrowdStrike, and you can see that right here. This is a bull call debit spread. It's a $10 width of the strikes right here. We went for October. So we gave ourselves pretty much 3 months of time for CrowdStrike to get through this stuff and get back above 280. I'm not asking for a lot on this stock, guys. I'm really only asking for it to be above 280 by the end of October. We paid $443 for it, and the max profit will probably be about, where we can close this will probably be between $700 and $800. So I'm looking for just under a 2x on this. If I can make $300, $350 on this one, should be good. And any significant bounce on CrowdStrike should allow us to get out of this one. So not looking to hold it all the way through October, but just giving ourselves an amount of time, right? So very easy way to play calls without spending too much on them, right? That is the call debit spread. Now, the rest of the positions didn't change much. I did take a bit of a position in Intuit towards the end of the day as well. Intuit's been a swing trade that I've been talking to you guys about now for the past 2 weeks, just pretty much looking for this weekly cup and handle to play out and start breaching some of these levels up here and attack the all-time highs. So that's just a very nice swing trade on Intuit. Only 7 shares, about $4,500 worth of capital. Now, we also opened MELI. Same reason, looking for a little bit of a swing trade. I opened those at the end of the day as well. Right? Could have obviously taken them earlier in the day and would have gotten an even better price. But I like MELI, guys. 2% here is not going to make the difference, because what are we looking for? We're looking for this weekly trend to the upside here, start breaching some of our previous 52-week highs and start attacking the all-time highs where most of your analyst estimates are pretty much in the $2,000, upwards of $2,000 range. So looking for that continuation, guys. Probably not going to sell these for a while. This will be my last position in MELI. Looking to probably sell over 2,000. So going to stick in that one for a little bit. Now, in terms of the other earnings trades that we took NXPI, and traditional to my fashion, guys, it seems that every single earnings player, most of them that I've touched in the last week, seem to be having their worst earnings that they've had in the past couple of years, right? I took Schwab last week, had to take a tiny loss on that one. Took Domino's Pizza last week. They had their worst earnings since COVID. Had to take a decent sized loss on that one, $500-600. Now NXPI usually doesn't move that much. I went with 2 times the expected move, guys. I went with some put credit spreads right down here. You can see NXPI after the close right now, earnings down 8%. Really not something that we've seen on NXPI, at least for the last 1.5 years worth of earnings. You'd have to go back a long time to see an 8% decline on NXPI. They barely missed, and they had a slight Q3 guidance downgrade by the company, but they had been saying that Q3 and Q4 would be a little bit lighter than expected because it's a transition year for a lot of semiconductor industries, right? This one specifically is exposed to a lot of the auto industry. So that's why this one came down a little bit. So we are still safe, guys. Not going to rule this one out right away. We have the 250s versus the 247.50s. So risking about $250. We have two contracts there. We got 11 cents per contract. So 11 divided by 250, about 4.4% for the week. So we'll see how these one goes, guys, if they can close above that 250 mark. Looking forward to see that price action. And as of the rest, guys, really not that much else. We just only took one UPS contract right here, the 133 puts on UPS. We got about, let's take a look, we got about 48 cents for those, right? So not too bad of pricing on those. And UPS, we're targeting the 133 lows. The expected move on UPS for tomorrow, I'll show you guys, just to show you guys that I'm going roughly 2 times the expected move, right? So UPS, let's have a look. If it's going to pull it up for me, my bad, guys. Let me just change it right here and it should load up right away. So moving into UPS. So UPS, the expected move is about 5.3% to the downside. And we went at 133. Keep an eye on the 133 mark. 133 is roughly not quite a double that, guys, but it's close, right? 8.5% to the downside. Not quite a 2 times standard deviation, but good enough. Fairly confident in UPS. And if ever it comes down here, guys, I may just take assignment because it's really coming into a very large area of support. We'll see how this one does. And we did, and that's pretty much everything. Oh, we also took some Spotify's. We got some decent credit on those, right? Put credit spreads as well on this one, 235s versus 230s. That is such a significant move to the downside if ever Spotify goes there, right? But with my luck, maybe we just end up with one of Spotify's worst quarters in recent memory as well. The 235s where it starts is about 20% to the downside, and the expected move on Spotify was about 9 if I'm not mistaken, right? So I did go 2 times the expected move. Yeah, it's about 9.6%. So we are 2 times the expected move to the downside. We'll see how that one goes. One put credit spread for about 15 cents. So we're risking $500, gaining about $15. I know it doesn't sound like much, guys, but it's the ROI, right? All of these put credit spreads, they're usually about 95% plus win rate probability. So this is about 3% for the entire week. Just looking to get out of these tomorrow at the open, right? Just because playing all of these earnings, guys, would be extremely expensive, right? You would need tremendous buying power to play all of these, but I went with the ones that I was most confident in: NXPI, Spotify, UPS, GM. The premium wasn't so good. Coca-Cola had no premium at all. I tried to get some premium on Lockheed Martin, but the market makers just were not giving it to me, guys. And that's pretty much everything. But tomorrow I'll probably be playing Tesla, Alphabet, Enphase, Visa, and maybe even some Texas Instruments. But I checked Texas Instruments. The premium is just not really good for them to go 2 standard deviations away. That's pretty much everything I had for you guys today. Hopefully that was insightful. If it was, consider dropping a like for the growth of the channel. Consider subscribing to the channel if you're new. Of course, we do these every Monday to Friday after the close. And as usual, guys, if you have any questions at all on earnings, on a strategy, an options play, anything you want, leave it down below in the comments and I'll do my best to get back to you within the first 24 hours. So take care, guys. See you tomorrow after the close. Happy trading and peace.